Okay, so personal exemptions versus standard deductions. What are they? Why do they matter? And what's the difference? So, personal exemptions is a type of tax exemption, and we talked a little bit about tax exemptions when we talked about state taxes, but I'll reiterate. It's just a way that the government sort of gives Americans a bit of a tax break because you have to pay taxes on everything. So, tax exemption is, or a tax deduction, is a deduction or exemption from the taxes that you would normally have to pay, and you can apply that against the total amount of tax dollars you owe the government at the end of the year. So, if you get a tax deduction of, let's say, I don't know, $1,000, that means you can apply that $1,000 against whatever amount of money you have to pay in taxes at the end of the year, and you just pay 1,000 less than that total number. Same thing with an exemption. So that's what a tax exemption or a tax deduction allows you to do, basically. It helps you save money so you don't have to pay as much in taxes. And so there are different kinds of deductions and exemptions. And Congresswoman Tolero and Dr. Wolf discuss two kinds right here. They talk about standard deductions and personal exemptions. So personal exemptions, we'll start there, is a tax exemption that were granted based on the number of persons in your household. This has nothing to do with how much money you make or anything else. It's purely just the number of people in your household. So for a standard American family, that's a four-person family, you get a tax exemption per person of $4,000, which means that total, if you have a family of four people, you get a tax break of $16,000, and that kind of money can really add up, especially because taxes can eat up so much of your income that, a lot of Americans depend on their deductions or exemptions like that. So that's what a personal exemption is. Standard deductions are tax deductions that you can get, and you're qualified to get them just for being a tax-paying American citizen. So if you are a single person and you're filing taxes, you can get a tax deduction of $6,200. If you are the head of your household, you get a tax deduction of $9,100, and if you are married and filing jointly, you get a tax deduction for both of you combined of $12,400, which is again just double the amount that you get for filing as a single person. Okay, so that's the amount that you get. So that sounds pretty good. It's a nice little tax break. So what this bill proposes, or what this bill has done, that Congresswoman Tolero talks about and Dr. Wolf talk about, is they raise the standard deductions, which sounds like a good thing, doesn't it? If you raise the standard deductions from about $6,000 to about $12,000, you're getting a tax break of an extra $6,000. Who would argue with that? Well, the other thing is they're getting rid of personal exemption. So if you get a personal exemption of $4,000 and you're just a single person, and you get a raise in standard deduction of $6,000, getting rid of the personal exemption doesn't really hurt you. In fact, you end up still a net $2,000 up from what the tax laws were before. Again, if you get an extra $6,000 in standard deductions, but you lose $4,000 in personal deductions, 6,000 minus 4,000, you still are up $2,000. So who would complain about that? Well, anybody who's not single and only filing taxes and supporting themselves would complain about that. Because if your average American family is 4 people, you will get an exemption of $16,000. So even if your standard deduction is raised to that $12,000, your $12,000 versus the $16,000 you would get in personal exemptions, you actually end up losing out in $4,000 if you have a family of 4. So this bill actually ends up hurting families of 4 or more, because they actually end up losing money by getting rid of the personal exemptions, even though their standard deductions are raised. And that's why Congresswoman Tolero and Dr. Wolf talk about this bill as sort of being sneaky,